Welcome back to the Deep Dive. Today, we're diving into something really fascinating, a case study of, well, spectacular failure, but not a failure of vision maybe, more like a failure of economics. We're talking about the Times Square casino proposal and why it got rejected so definitively. I mean, looking at the source material you compiled for us, the sheer power behind this thing was just staggering, right? You had Jay-Z, who's a bigger cultural force, bringing all that celebrity, that marketing savvy, and then teamed up with Caesars, the massive global gambling operator, and SL Green, the huge New York real estate player. Yeah, this wasn't some small-time bid. It felt like a juggernaut. You put that kind of star power and financial muscle together, and, well, you'd think approval is almost guaranteed, but it wasn't. The bid was rejected, flat out. So our mission today is to figure out why. What's the Jay-Z casino lesson here? Why does a project that seems totally invincible on the surface fail when it gets down to the nuts and bolts? Okay, let's unpack this.
That's exactly the paradox, isn't it? That huge gap between the perceived power and the final outcome. And to understand it, I think we really need to, right off the bat, separate the two main parts of this venture. The sizzle and the steak.
The sizzle versus the steak, okay?
Yeah.
And in this case, the sizzle was like A-list celebrity, top-tier sizzle.
Oh, absolutely. Premium grade, as you said. Pillar one was the brand, and that was Jay-Z. His involvement was clearly strategic. He was the public face, using his incredible cultural influence, his capital, really, to sell the dream of this casino. His job was to build up political goodwill, get the public excited, and kind of frame this whole thing as vital for New York's comeback.
Selling it as necessary, exciting, even good for the community. You really can't overestimate how powerful that kind of endorsement is.
You can't. But, and this is the crucial part, we have to separate that from the mechanics, from pillar two, which was the structure, the cold, hard financial reality brought by Caesars and SL Green. They were the stake. They brought the actual numbers, the operational know-how, the billions in capital, the corporate framework, and critically, the financial projections that were going to be put under a microscope. So these two things, the brand and the structure, they have to be looked at separately because ultimately the project's viability hinged entirely on that structure side.
Okay, but how do you really pull those apart when Jay-Z's name was so central to the political pitch? Wasn't the promise of his brand opening up new audiences like part of the business case too?
It definitely helped open doors, sure. Got them in the room. But it wasn't enough to, pay the bills for the city, so to speak. When they actually went before the regulators, the advisory committees, the partnership leaned heavily on this compelling public story, trying to win over the local community boards. They weren't just selling gambling. They framed it as this engine for local economic growth, for community uplift.
Right. So what exactly were they promising? What was the stated value proposition?
Well, the benefits they listed were pretty broad. A big focus on job creation, naturally, hundreds of new jobs. And they made a point of specifically committing to prioritize minority hiring, which is, politically smart. Plus, there was talk about investing in local infrastructure, making real contributions to community benefit funds. They really packaged it to look like a win-win for Times Square.
Okay, that sounds like a strong pitch. New jobs, investment, helping the community. Why wasn't that enough? Where did it fall apart economically?
Because, well, good intentions and slick branding can't fix bad math. That's the pivot point. When the advisory committees looked past the glossy brochures and dug into the actual financial projections, the structure, they asked a really basic question. Is this project actually creating new value for the area, or is it just moving existing money around?
And the numbers told them.
The numbers told them it wouldn't really expand the local economy, not in any significant way. The flaw they found was, well, it was immediate and fatal. The core business model relied heavily, almost entirely, on cannibalizing traffic from Broadway.
Cannibalizing Broadway. Explain that. How does taking business from Broadway work?
And from the surrounding businesses, too. The restaurants, the shops, other entertainment venues.
Wait, hang on. If they're hiring hundreds of people, isn't that economic expansion?
Yeah.
If 1,000 gamblers show up, isn't that new money?
That's where you have to get really specific about the Times Square ecosystem. It's unique. The committees projected that most of the casino's customers, tourists, and locals alike would be people already in the area for something else, for Broadway, for dinner, for shopping. So instead of someone maybe seeing a show and then going to gamble, the projections showed people choosing the casino instead of buying that Broadway ticket or eating at that nearby restaurant.
Ah, okay. So it's not adding to the pie. It's just taking a slice from someone else's plate.
Exactly. Think about the value. A Broadway ticket might be, what, $150 plus maybe dinner beforehand, maybe some shopping? That's a high-value visit for the area's economy. If the casino pulls that person away, maybe they spend, I don't know, $50 at the slots instead. That $150 plus spend in the local ecosystem gets traded for a much smaller casino spend. It was calculated as a net loss for the area because the revenue wasn't new, it was just redirected and actually diminished in total value.
Wow. So instead of being this economic engine bringing fresh cash into Manhattan, the model basically showed it acting like a giant vacuum cleaner, sucking up existing entertainment dollars from an already successful industry, Broadway and everything around it, just to feed the casino, which makes the net economic impact zero-sum, or maybe even negative for the neighborhood overall.
Precisely. That's the core finding. And what's really interesting, reading through the sources you provided, is how clearly the advisory committee saw this. They weren't fooled by the hype. They understood that if your basic profitability depends on taking revenue from your neighbor, especially when that neighbor is Broadway, this vital cultural and economic engine, well, that just fundamentally breaks the promise of positive local development. They decided the underlying economic structure was actually harmful to that unique, dense, cultural environment of Times Square.
That realization must have made all those promises about jobs and community benefits seem, well, a bit hollow. I mean, if the overall economic pie is shrinking, creating 50 jobs here doesn't really help if it puts 5 other local businesses employing 60 people out of business. Okay, so let's nail down the final verdict. This is where it gets really interesting, like you said, and where the lesson really hits home for, anyone listening. The rejection was decisive. Was it about, moral objections to gambling? Or maybe just local politics, neighborhood groups lobbying against it?
No, and this is critical. The sources are really clear on this. The rejection confirmed a cold, hard business principle. The proposal was turned down only because its structure was fundamentally unsound, because the business model itself, based on that cannibalization, was flawed.
Just the economics.
Just the economics. The decision was explicitly not a judgment on Jay-Z, his brand, his involvement, or even on gambling itself.
They managed to completely separate the star power from the corporate reality. And the reality just didn't hold up.
They had to. For a decision this big, they had to look at the bottom line. Is this project a net positive or a net negative for the area? Brand equity, celebrity buzz, it creates momentum, it wins headlines, sure. But it cannot fix broken math. It can't magically make a bad business model good for the community. The model didn't make sense for that specific location. It didn't offer significant new value. And, well, that was that. Billions of dollars potentially on the line, sunk by that one fatal flaw.
It's such a powerful case study. The failure of the Times Square casino plan. It really speaks volumes for anyone in strategy or investment or, just launching any big new thing. It shows that structure always trumps the sizzle when the real money, the serious decisions are being made. So, boiling it down, what are the key takeaways here for someone listening based on synthesizing these sources?
Yeah, I think we can distill it into 3 core lessons, and these apply way beyond casinos, really to any industry. First, sound economics are paramount. The basic business has to work on its own merits. Celebrity endorsement, great marketing, that stuff can open doors, maybe get you a meeting, but it's no substitute for a solid financial plan. Substance has to beat style.
Okay, makes sense. And lesson 2, stemming from that cannibalization issue, must be about genuine growth, right?
Exactly. Value creation is non-negotiable. Your proposal, your venture, it has to show how it's going to create new economic value. If your plan basically relies on just shuffling existing money around or taking market share without growing the market, decision makers focused on long-term health are going to see right through that, and they'll likely reject it.
Got it. New value, not just shifted value. And the third lesson, sounds like it's about knowing your audience, the decision makers.
Precisely. Scrutiny will focus on the model. The people who hold the keys, regulators, committees, major investors, they will always eventually prioritize the nitty-gritty of the corporate financial structure over the flashy brand appeal. When it comes down to the final yes or no on huge deals, it's the detailed business plan, the projections, the underlying assumptions, not the celebrity face that determines the outcome.
Wow. Yeah, it's just an incredibly stark illustration. Even the most powerful marketing machine couldn't fix a fundamental structural weakness. So what does this all mean? I guess the ultimate lesson we can pull from this deep dive from the Times Square casino story, it's really powerful and pretty concise. Celebrity branding can definitely sell the dream, but it's the corporate structure that decides the reality.
It's a really sobering reminder, I think, for every entrepreneur, every investor, every leader listening right now. The next time you encounter one of these big star-studded projects, or any venture really, that seems to have massive momentum behind it, what are you going to look at first? The celebrity selling you the dream, or the underlying structure that's actually going to determine if that dream becomes a reality?
That's a fantastic question to mull over. Definitely something to keep in mind next time you're evaluating an opportunity. Thank you so much for sharing these sources with us, letting us really dig into the mechanics behind this high-profile rejection. Really insightful stuff. We'll catch you next time on The Deep Dive.